Alright guys, what's up? Scatty Trades here. I'm back with the video. Today we're going to be talking about how I use imbalances in my trading. Before I get started, if you haven't seen my video on liquidity, I'd recommend watching that one first, as the two kind of play side by side in my trading. You'll notice a lot of similarities between this video and the other one, just kind of replacing the concepts with imbalances, and then how I use those slightly different, of course. So let's get started. Alright, so we're down here for the video. First thing I want to cover is what are imbalances. Now, I don't want to go into too much depth. I could speak about this for pretty much forever, and that's not really the purpose of this video. So if you're new, you're welcome to join the Discord, ask me questions in the comments. I kind of help everyone out in my Discord when I can, but we're going to be covering how I use imbalances in my video. So just a brief summary, what are imbalances? The definition is a price range that is offered in favor to one side of the market, so the buy side or sell side of the curve. What does that mean exactly? In terms of imbalances, there are multiple kinds. For example, there's gaps, volume imbalances, liquidity voids. Today we're going to be talking about the fair value gap. So if you know what a fair value gap is, the buy side imbalance, sell side inefficiency, which is a bullish fair value gap. And then the same thing for a SIBI, which is a sell side imbalance, buy side inefficiency, which is a bearish fair value gap. So I'm going to give you guys two quick examples right here of a bearish fair value gap. You can see 1, 2, 3 candles. That's the gap between, which is the sell side imbalance, buy side inefficiency. The reason it's inefficient is because price did not manage to pair orders long here, and it kind of went very quickly to the downside, which is a lot of sell orders being filled. So likely price will come back up, retrace into that area, and then run towards the objective. And then same thing over here, the buy side imbalance, sell side inefficiency. So see, this time on the buy side of the curve, we expanded in 3 candles, 1, 2, 3. Your buy side imbalance, sell side inefficiency is right there between the first candle high, third candle low. You guys should already know this. And then as we came back, we came out and took out the objective. So what is the importance of these fair value gaps? So I'm going to remove these two images. The importance of these two fair value gaps are shorting or longing off a fair value gap offers potential low resistance liquidity runs towards old highs or old lows. I'm actually going to put those pictures right back, and you see this low resistance liquidity run toward the old low, and this low resistance liquidity run toward the old high off of this fair value gap. So price retraces to offer fair value. You can say, or pair the orders pair the orders that were not filled long here. So as price comes up, those long orders are being paired, and then we get to continue lower. I have this little marking at the side, right, the bottom right here, internal range to external range liquidity. Now I've talked about this concept when it comes to narrative and bias. I have a video on bias, so this is going to be a big focus of our video today on how I use imbalances. And also this last part right here, algorithmic price delivery often seeks to rebalance an imbalance in order to rapidly seek liquidity through pairing orders. So like I said, price will go up, tap into the fair value gap, and then usually when you're right about your narrative and higher time frame and time and everything, price will rapidly seek lower to take out sell side or buy side. Another thing a lot of people seem to forget is this fakes out dumb money, quote unquote. So when price is retracing into a fair value gap, a lot of people who are not in sync with the algorithmic price delivery will see that as a potential breakout long or breakout short, and they'll see that as not a retracement but as a reversal, and then they would take that being dumb money, quote unquote, and then we would basically be using that as our liquidity. So let's talk about how I use imbalances in my trading specifically. How I use imbalances in my trading. So based on what we learned from the previous slide about low resistance liquidity runs, price rebalancing an imbalance, and then seeking the old high or old low, this is going to help me understand where price is going to go. So this is my model up here. I've had the same model since I started streaming. Everyone knows this is exactly what I look for every single day from 9:30 to 11:30, which is my favorite trading window. Imbalances help me decide where price is going to go and predict. So how do I predict price so accurately? Imbalances are a part of that. So this helps me with narrative and drawing liquidity. Framing trade ideas is the second way imbalances help me. So which part of my model does that help me with? It's higher time frame PD rate, which is what I frame my trades off of. And then finally, when paired with time, of course, because not every imbalances is formed equal, entry confirmation. So time and confirmation kind of play a role together, and I use imbalances in those. And obviously, just like the liquidity video, this is fractal. And if you give me the chance to show you, I'll explain to you guys exactly what I mean, how you can use imbalances higher, intermediate, and lower time frame in order to execute a beautifully framed trade. So let's get started. So here we are on the weekly time frame on NASDAQ. Now, I haven't talked about inversion fair value gaps in this video, but what you can understand, we're just using what we used before. You see this bullish fair value gap right here got invalidated, which is in other words an inversion fair value gap. So this is what you would want to see if you were bearish, right? So inverting this weekly fair value gap, right? You see that price has been bearish and it came out and took this low. So let's study this price fractal. So this is the weekly chart. Let's go down to the daily chart. So on the daily chart right here, you have the same weekly fair value gap that was inversed, giving you bearish market structure. So where exactly was it inversed? It was on this candle right here on the Wednesday, right? So this is where the weekly fair value gap inversed. Now we can remove this red line over here. So understanding, if we are able to go back in time, right, we can see the weekly fair value gap was inversed right here, and we formed a bearish fair value gap. So using the weekly fair value gap being inversed and the bearish fair value gap forming off of it, you could potentially develop a narrative for lower prices here. So let's remove this weekly fair value gap and let's keep this bearish fair value gap marked out, and we'll use red just for retrospect. So what could you potentially expect? Like we said in the first slide, short or long offer fair value gaps offer potential low resistance liquidity run toward old highs or lows. Algorithmic price delivery often seeks to rebalance an imbalance to rapidly seek liquidity, and this fakes out dumb money. So what can we expect here? We can expect price to retrace into the fair value gap and then continue towards an old low. So what exactly happens towards this bearish fair value gap? The next day we consolidate, and the day after we get closer to the bearish fair value gap, and eventually we tap in on Wednesday. So what can we expect here? So we have an old low right here, right? This is now an old low, and playing off the idea of internal to external range liquidity, we can expect this low to get taken off of this daily fair value gap, playing off the idea on the higher time frame weekly, which was the weekly fair value gap getting invalidated. So you can see here, we took out previous day high on Thursday, expanded lower, not taking out the low yet. What can you expect on Friday? Is to eventually take out the final low, which is right here. And you can see we also took out this low over here, which is the weekly swing low. And we also took out this low over here. So these two lows are relatively low resistance liquidity runs on lower time frames. And you can see how we played off the idea from the weekly inversion, forming the daily fair value gap. Once we came back in, you can see that we came back and took out the lows. So now that we talked about understanding where price is going to go using the higher time frame, we can also use this to frame trade ideas. So understanding this to understand narrative is one thing, but how can you actually enter a trade after you see the weekly inversion that we talked about here, forming the daily fair value gap? How can you actually go about entering a trade when you see something like that? That's what I'm going to show you guys. So if you go back, so if you guys remember the Friday, right, you can see that the Thursday, remember this price factor right here. Now this is NASDAQ. The next chart is going to be S&P 500, but I'll talk about that later. You can see we tapped into here and we haven't taken out sell side yet, and we expanded away from this, so you can be bearish on the next day on the Friday. Now Friday is NFP, and I have a specific protocol for NFP, but the concepts, they remain the same. Just because the volatility increases and the manipulation is increased usually on those kind of news days, this concept still applies. So, and I did take this trade, which is why I'm using this specific example. So here you come on the S&P 500 and you see it's Friday, and now this is my favorite trading window. So 9:30 to about 12 is my favorite trading window right here. And so you know, this is exactly what I was looking for in my model. So what do we have here? The 8:30 news candle formed a 15-minute bearish fair value gap, right? So taking that daily bias, transposing it to the 15-minute time frame, what would I want to see when I'm looking to take out this trade, right? So the 15-minute bearish fair value gap, price retraced into it right there at 9:30. This 9:30 15-minute candle entered the 15-minute bearish fair value gap, right? And I'm bearish, right? We're also, right, we also took out this buy side here on ES, and you can see I've marked out an SMT. So the NASDAQ actually made a higher high in this case. So NASDAQ looks like this, and the S&P 500 looks like this. So using this to frame a trade idea on the 15-minute time frame, which is how I use it for number 2, you can frame that trade idea and then carry on with entering on your entry confirmation, which is also can be a fair value gap. So marking out this 15-minute fair value gap, we're going to go down to the 1-minute time frame and see exactly what that looks like. So this is your 15-minute fair value gap marked out. from here to here. And you can see this is a huge 1 minute imbalance as well. So here is your SMT. So the S&P 500 was the weaker asset in this case, which is why in this example I'm using the S&P 500. Although I do prefer the NASDAQ and its volatility, the S&P 500 is the weaker manipulated asset in this specific price fractal. So what can you see here? The 942 high was put in. If you guys follow me on Discord and my YouTube live streams, you know I talk about the 940 high, the 940 to 945 high, and then the high also formed from 950 to 955. That is a concept I haven't talked about in my YouTube video. I plan to release it last because currently I only have around like 200 data points confirming how I use that concept. I'm looking to get another 200 to 300 data entries before I talk about that concept. But if you know, we've been working on that together. And this is your strong 942 high nonetheless, which formed the SMT inside the 50-minute fair value gap. So how can you look to enter a trade like this? So we entered the 50-minute bearish fair value gap. You're bearish. How can you actually enter a trade? Well, you can wait for a 1-minute bearish fair value gap to form off of the 15-minute one. So now I'm going to remove this because we've already tapped in. And here, behold, you have the 1-minute bearish fair value gap as well as the invalidated bullish fair value gap on the left. So you can see the bearish fair value gap right here. Now we did go a little bit higher, which is okay because it's NFP. You can expect some coloring outside the lines, but nonetheless, this fair value gap delivered all the way towards the old low, and these two lows being relatively equal. These two lows being lower resistance liquidity runs. Yes, we did sweep this low right here, but we have relatively a nice low resistance liquidity run right here, and we tapped into the bearish fair value gap, and then we went lower. And you can see, if you notice very closely, there is another bearish fair value gap right here. And you can see we ended up delivering a lot of moves from the high, and then even if just from the fair value gap, we managed to move around 70 points. And you could have taken profits at this low. And you can see how we broke down the idea from the weekly inversion to the daily bearish fair value gap forming in. Once price went back to the daily fair value gap, we came down to the 15-minute time frame expecting that low to get taken out. And if you notice in my Discord, I did say I was looking for that weekly swing low on NASDAQ. I said that Friday morning, and you can see it played out pretty much perfectly. We had the SMT right here, 15-minute bearish fair value gap. What happened after we entered the 15-minute bearish fair value gap? We formed a 1-minute bearish fair value gap, invalidating the bullish one. We came back in, came into this order block, and we went lower a lot towards that weekly low on NAS. And if you come back to the NASDAQ chart right here, the weekly low was that low over there. So that was the low we were looking for on the NAS. So this low right here. And we managed to go in. And one more thing I will note is, okay, this thing is annoying me. How do you, okay. This was the weekly low I talked about in my Discord. And if you notice one more very slight thing, you can also see where do we end up really going to was this weekly imbalance that was never filled out. So we actually came all the way into this weekly imbalance. So you can also use that as potential drawn liquidity, although I was looking for sell side. This weekly imbalance could have been a place you could have held for runners or whatever the case may be. So with that being said, you can see now how I use the first part of imbalances to understand where price is going to go, which helps me with my narrative and drawn liquidity, framing trade ideas for higher time frame P rate, that component of my model, and then finally understanding that this is fractal. You can understand when paired with time, entry confirmations are available when you use imbalances in your trading. So that's how I use imbalances in my trading, very similar to how I use liquidity. I think everyone should honestly be using imbalances and liquidity in their trading, and it's going to really help you improve where price is going to go and frame trade ideas that you can enter off of that yield really good risk to reward setups. The next video is going to be premium and discount, which is going to help you decide which high, which low, and which imbalance is more heavily favorited to use in your trading. So obviously I had to talk about imbalances and liquidity first, but now if I add premium and discount to the concept, you're kind of more narrowing, and how I usually narrow which highs and lows and which fair value gaps / imbalances I use in my trading. So with that being said, I'll see you guys in the next video in premium and discount. Till next time, peace.